want them to do, if that has ever happened. Yeah, as a founder, you know that's something that probably doesn't happen. Emmanuel is part of the reason Eric has come to Uganda, and I'm thankful for the partnership. And, of course, you're welcome to the village, Eric.
Thank you.
It's been a long time coming, about 5 years.
Yeah. I can't believe in 5 years we've been talking remotely. I said we knew each other. We're meeting for the first time. Can you believe that?
Yeah. So I've been talking to Eric for the last 5 years on WhatsApp, on call, finally trying to get him to come to the village, and I'm happy. I was told that I'm supposed to introduce you. I don't think so, because if someone hasn't interacted with you, then you're probably in the wrong room. So you can read all of that online about Eric. Eric has been, for me personally, doing a lot of work on the continent around accelerating capital for entrepreneurs. Capital is the biggest missing piece any entrepreneur faces. And I'm happy I can tell this to you directly. I have a lot of beef with you. In my country, beef is, I'm not happy with you.
Yeah, I know.
And
we
the
have
reason,
a love-hate relationship.
yeah, the reason is Eric did a concept he calls Kings. Kings, innovation opportunity across the continent. So his Kings involves, what's the K? You can guess that. Kenya. What's the I? Ivory Coast. What's the N? Nigeria. Narrative from kings to you kings. Yeah. The you
kings.
Yeah, but really, Eric, this is your time. I'll just let you take it away before we even go into any questions. Because the question on every startup's mind is, how the hell do I raise capital? Where do I get that money from? We've been, attacked is the word I'm using by entrepreneurs, and says, you guys have over-mentored us.
Dead to me. Probably about 25 years ago, I was in high school in Accra Academy, which is the leading private high school in Ghana. I was a student, and he had started something called Foundation for Future Leaders. And he came to our school, and it was quite an inspiring moment for me. It was as a young man in high school, I was kind of discovering myself and my destiny and what I should do. And so he coming to our school and giving a talk really got me to think African, And then fast forward, many years later, he's invited me to Uganda. He's come ahead of me. This is not my first time in Uganda. I actually helped build an ISP. There was some years, about 10 years ago, I was active here. So this is probably going to be my second rodeo. And as CK said, hopefully I can start investing here as well. But the second protocol that I want to take care of is the Kings thing, which you have every right to have a beef with me. A lot of my non-Kings friends have a beef with me. And that's exactly the reason I did a Kings concept, right? The idea was I wanted to challenge the other countries to live up to an ideal. So I came up with, So I came up with this Kings concept that created a love-hate relationship, because I wanted to select 5 countries that of course I like the word Kings, right? Kings is about leadership and all this stuff. But I wanted to use that as a metaphor to challenge the countries that were not there to get there. So CK will tell you that that's one of the things that bends him every day. So every day he's like, I want to get Uganda there. And that's exactly what I wanted to achieve. So now that CK and a lot of other countries like Morocco, Egypt, Senegal, Tanzania have come up to that level, now I have a challenge. Now they thrown the ball to me, so I have to come up with a new acronym. So watch out for it. I'll be coming up with a new acronym, and I'll be coming up with a new book. I won't tell you when, but I'll work on it. So with those two sort of protocols out of the way, I will get to the substance of our conversation, which is how do startups raise money? So I'm an accidental investor. So when Dad to me came to my school and talked to us, I never thought I would be an investor someday. I am an entrepreneur. I think I still am. But I was lucky to be successful in my entrepreneurial ventures. I built a bunch of ISPs, including here. I was involved in a company called One2Net. If any of you could cast your mind back a little bit. Yesterday I was hanging out with my former partner, Badri Tege, who moved into HR, and I moved into venture capital. When we, and I have another good friend, Charles Musisi, who was the guy who started .Eugene domain, the CCTLD. So Charles is an old friend. He was going to be here, but something came up, so he couldn't make it. And a few other people. And then I kind of transitioned into building subsea cables. When we built the ISPs, we created a very strong retail internet industry across Africa. And we started the African ISP Association, which was a trade association of all the ISPs. We built internet exchange points. Actually, the Ugandan communication tower downtown, the basement is where the internet exchange point is. We put it there. I was told it's still there after many years. But what I realized was that we had created a very competitive downstream ISP industry, but all of us went to one pipe, which was sort of the upstream fiber connection. Actually, at that time, Uganda was one of the countries that had no subsea cable because you are landlocked. Kenya was a coastal country but had none. There was one called SAT3 that went on the southwestern seaboard from Portugal to Senegal to Ghana, Nigeria, all the way South Africa, then went to Mauritius and went to India and skipped the whole eastern seaboard. And those of you who know sort of a bit of the ISP industry, most of the time, these countries that are not having the subsea cable, you connected to satellite. And it was very expensive and slow. So I decided that I was going to try and solve that problem. Luckily for me, I got a fellowship to Stanford, and I focused on studying that. So I came back, and the Kenyan government invited me. So 07, 08, when Kenya was going through the election violence, we were busy connecting it to the rest of the world. That's when we architected a plan and built the first open access subsea cable called TEAMS, the East African Marine System. So we then extended to Kampala and then to Rwanda, to a lot of the landlocked countries. So that was sort of the second part of my first life, building connectivity across Africa. And whilst I was doing that, I noticed another phenomenon, which was that the subsea cables that we built connected to the mobile phone networks that were also being built around the same time. So I wasn't in the mobile phone, game. I observed it, but I was building most of the subsea cable. But these subsea cables connected to these mobile networks and created what I call a mobile web continent. In the sense that in Africa, most people see the internet for the first time on their phone. And their phone is connected to subsea cables that connect them to the rest of the world. And I observed that that was significantly different from how it happened in the West. But it wasn't remarkably different from how it happened in Asia, and most importantly, Southeast Asia. And so in China, everybody's on the phone, and everything goes through the phone. And so I realized that that same thing was happening in Africa. And a new generation of entrepreneurs were building the applications that sit on top of that network layer. So, I started by advising a few of these startups. And then my first startup that I was advising, one of the founders gave me 7% equity in the company. I'd helped them with a lot of advice, put a little bit of money here and there. And the company became very successful. And that's how I forayed into investing. When I was an entrepreneur, Esther Dyson, who is a famous angel investor in the US, invested in me, and we did some stuff, and we stayed as friends. So one day I was chatting to her, and he said, Eric, what you're doing is angel investing. And actually, you probably got it right the first time. Your first startup actually is successful. Most people fail 10 times before they get it right. So maybe you are good at doing this, so maybe you should do it. And then other people like Andile and Kaba encouraged me. So in 2012, I transitioned to become sort of investing back in startups. And so that's the background. That's how I got into this. And most importantly, I realized that I enjoyed doing it. I never had instincts of starting a new company. I never had instincts of starting my own company. But I really enjoyed working with entrepreneurs. And that was my litmus test that it was the next thing that I was supposed to do. And then I've been learning on the road. I've been just, figuring it out as I go. And today, Chanzo Capital is a partnership of 5. my other four partners. I'll introduce them briefly and then tell you a bit about the firm so that it gives you some color. So Ian Zider is the operating partner, and Ian sits in Accra and overlooks West Africa. And then we have Sewu Steve Tewia, who's in Nairobi. He's an investment professional, so he brings the investment part to what we do. He sits in Nairobi, overlooks East Africa. And then Moses Kosana is a finance partner. He sits in South Africa and overlooks Southern Africa. And then John Gozier is our investor partner who sits in Atlanta and looks after our U.S. Investor relations. And I'm sort of managing partner. I take all the credit and do nothing. So that's how we're structured. We're a Mauritius fund. We have 3 offices. And our first fund, we invested in a total of 16 companies. 4 of them failed. 12 are still going. The net asset value of that portfolio is about $50 million. We call it the King's Startup Fund. And now we're in the process of first closing what we call the King Scale-Up Fund. So the second fund sort of is a follow-on. Some people call it growth. We just call it scale. Right? So when a company is about to sort of inflect, that fund will help you with the inflection. So those are the 2 assets, funds that we hopefully will manage. And then we have a third important part of the firm's work, which is our annual Angel Fair Africa event. So the first 2 that I talk about is the capital part of our function. Then we have what we call community, right? And Angel Fair is our big community event that we do every year around Africa. So this year we're supposed to bring it to Kampala. I wanted to surprise you guys, but CK thought that it wasn't the right time. And I always believe in local knowledge and local expertise. So we'll bring it here eventually, so don't worry. At the time that CK is ready, we'll bring it. But we're doing it to Mauritius this year. We took it to Mauritius. And every year we go to a new country. The event allows us to achieve 3 things. First is to spotlight innovation hubs, like here, like what is in Mauritius and other places. But secondly, we bring about 10 to 20 entrepreneurs and about 40 to 50 investors from around Africa and the world. And we sit in a room like this, and essentially the entrepreneurs pitch and the investors invest in them. And that event, we started in 2013 in South Africa, and today we've realized about $23 million worth of investment through the 8 events that we've done across Africa. And this year will be our 9th event. Last year we did a virtual event. We were supposed to go to Senegal, but because of COVID, obviously we couldn't do it physically. And so that is a strong part of our community activity. And then the last part is what we call capacity. And this is part of that. We do these talks and these seminars with partners locally to help entrepreneurs understand things, to help you build capacity. So hopefully today I'll be able to share some of our experiences and our thoughts, and it will help you kind of understand how investors think, how they look at entrepreneurs. And I'll be happy to take questions. I also learn from you. Most of the time, entrepreneurs think that they have to learn from investors, but it's a two-way street. We need to understand how entrepreneurs think, your nightmares, and what keeps you awake at night so that we can be better investors. So I'm here to, as much as share my experience, but also learn from you guys. So please, share also your thoughts, what you think. We want to take people who are online, just those in the room. So we want to make sure that it's a two-way street, not a one-way street.
Thanks, Eric, for the background. I have a lot of questions, but I know everybody else has questions, and so far I received about 15 online. But for me, 2 things. We'll begin with the first. What do you see in the Kings that you haven't seen in markets outside the Kings?
Good question. So, like I said, I think that what I saw in the Kings, I now see in some of the non-Kings countries, right? In the book to doing that, you have people who have the enabling environment. It's still possible to do innovation, but it's harder, right? If you look at the technopoles around the world, if you take Silicon Valley and you take, India, you take Route 104 and all these places, there's always an enabling environment that creates the impetus for all this to happen. The third thing is that you need a robust technical infrastructure around connectivity, subsea cables, you need that blood, data, the new sort of oil that runs that whole ecosystem. And then you need a very vibrant telecom sector, and then you need an enabling ecosystem of the various actors. So generally you want government, research and academia, so academic institutions that produce the talent, right? The talent pool that runs through this. And then you need, research institutions that helps to create that impetus to solve problems, right? And then you have a driving private sector that normally leads the way, And I have confidence is that you can see that in Kampala now, you can see it in Egypt, you can see it in Cairo, you can see it in Marrakesh, you can see it in Casablanca, you can see it in Dakar, So it's been a long time coming, and I'm particularly excited that you can see this across Africa. And which is what encourages us to do what we're doing, which is why we're expanding our horizons to now start looking at investing beyond the kings.
Yeah. All right. So just to, just dig in a little bit there, what does an entrepreneur who is in a market where those, fundamental pillars are not, what should they be thinking of? I remember one day I was attending the early stage Africa Investment Summit, and they were talking about the hubs, in Africa, and they were talking about Lagos, Nairobi, and Cape Town. I put up my hand and said, what about us who don't come from these hubs? And the guy said, I don't have an answer for you, sorry, So
That's
what would an entrepreneur who's not in that sort of hub be thinking as they're building something?
Well, sort of the hard part answer to that question is that it means you are, going up against a rock and a hard place. You are caught between a rock and a hard place, right? But it doesn't mean that it's impossible. It just means it's harder, right? But I think that eventually you're going to see that this activity is going to simmer down. Because the reality is that when you invest and when you build companies, there are two activities that run in parallel, but they interface at some point. So I say that investing is an art, whilst building a company is a science, right? And they run in parallel, but they also sort of are different tracks in the same parallel. In other words, the way you raise money is not the same way you build a company. And so when you're an entrepreneur, it's almost like you have to be a scientist and an artist at the same time. And this is where sort of a lot of entrepreneurs kind of miss it, right? And I think that the art of investing is also a different exercise that I am continuously learning. I told you I'm an entrepreneur, so I was a scientist. And I'm learning the act of investing. I don't think I know it. I don't think I'm anywhere close to where I want to be. But the important thing is that I'm committed to that process of understanding why there are more entrepreneurs that are looking for capital than more of us that should be providing capital. And it's a situation. Because if you look at it, the entrepreneurs, have the leverage, right? So why is this provision of capital not adequate? Then I started studying other technopoles. So you take Silicon Valley, for example. And I use Silicon Valley because I live there still and I understand it a little bit. So the way Silicon Valley was built was after the Second World War, the Stanford family and a few rich people said, we wanted to build this, place where people would solve problems. So they gave money to Tim Draper's great-grandfather who came from the Second World War. And you know what he did? The criteria then for looking for companies was they go through the phone directly and they look for companies with semiconductor in their name. So if you have a semiconductor in your name, they call you up. Say, hey, CK, your company is Innovation Semiconductor. Do you need money? We have money for you. So that's how Silicon Valley was built, where there was money sitting down and they were looking for entrepreneurs, right? And technically, that's how the equation is supposed to be. But here is the opposite, right? All of this stock and all this big, we invest in probably 2 or 3 companies the entire year. So something is wrong with the equation, right? And so, and what is wrong with the equation is that a lot of the work that is And so the people that control the wealth made the wealth in a certain way. And so they look at the wealth through that lens. So this ecosystem needs to generate entrepreneurs that will become successful, and then they will reinvest, right? So that's how the equation is going to work eventually. And that's why I'm doing what I'm doing, because I believe that it's a responsibility on my shoulder as somebody who succeeded, was lucky to succeed. Because there were people who work harder than me. And 10 years ago when I started this, I remember some friends told me, Eric, you're going to get poor, you're going to lose all your money, and you're going to realize that you made a totally wrong decision. Because, like I said, I always believed that there was a responsibility on my shoulder for me to be sort of a stepping stone for the next entrepreneur. The same way somebody was a stepping stone for me, right? So that's really what drove my thinking. And I was ready that I was okay if, I ended up, losing everything, because really I came to this world with nothing, right? So we all go with nothing anyway. That's what it is, right? You're not going to go with anything. So try and live everything you made here.
Talk about the money. And most of the guys here and online don't know that my history, I used to be an artist.
There you go.
Yeah. So when I think of money, the song that comes to my mind is money, money, money.
That you need to understand. The first I kind of touch on it is that raising money is an art and not the same as the science of building a business. And it's an art because you have to build relationships. It's an art of relationship building. Think about it for a minute. If you are in trouble and you need money, who is the most likely person you will ask? Anybody? Just give a random answer. If you need money, let's say somebody died. Let me not use that. Maybe you're in trouble, you lost money or something, and you just need money. Who is the most likely person you will ask? Friends. Exactly, family, friends, right? Why? Right? It's a relationship there. So, and you feel comfortable asking your family or your friend that you went to school with, right? Because what? You have a relationship with them. So if you don't have a relationship with me, how do you ask me for money? So you see that? So raising money is an art. So you have to start a different track. So you're on this track where you're trying to build a company. But because you need to raise money from Eric sometime down the line, you need to start a second track, a parallel track of getting to figure out how do I get to know Eric. So that the day I need money, I will feel comfortable, and Eric will be comfortable enough that if I ask him money, he will consider giving me. So you see it? So this is a very strong fundamental that I learned through my career, right? And a lot of people don't have this fundamental. And if you don't understand it that way, you realize that raising money becomes difficult. Because you can never work to somebody you don't know and then ask them for money, and because you have a great idea, they'll write you a check. I mean, it happened once in a million times. It does happen, but it's 1 in a million times, right? So that's a very important foundation that you have to understand. The third important foundation you understand is that the core of entrepreneurship is you solve a problem and then you get customers who buy the solution and pay you for it, right? Now, the core of the capital that you need to get for your business to work should come from your customers. But when you start, because you don't have customers, you only have an idea, you need somebody who gives you that initial capital to get started, right? And that's why you go to investors. So at an early stage, the first group of investors you go to, we call them angels, angel investors or angels, right? The reason they call them angels is they're almost angelic. They're more like beings from heaven, right? Because they are people that somehow are able to see into the future that you see without knowing that future, without experiencing it. So you go to your dad or your uncle and say, hey, uncle, I finally want to start a company, and this is the idea. And then you talk a lot of stuff. Your uncle he's like, what are you talking about? But you know why he will give you the money? Because finally you want to do something, and he trusts you. He has a relation with you. So he will give you the money if he has it, or he will connect you to a friend. And you go to your friends that you went to school with because your friends are, this Eric has not been useful all his life. Finally, he comes out with an idea. Okay, let's back him, right? The reason is that finally you come up with something. Why? Because they know you. They know that if Eric has finally come up with an idea, we better help him, man. Because if we don't help him,
Who's going to help him?
who else is going to help him, right? So, and then the third in that category is they call them fools. So, family, friends, and fools. The fools is the ones in a lifetime guy that you may speak to that you don't have a relationship with. I mean, I've invested in people that, I do it once in a while that I never knew I didn't have a relation with. But somehow I sat with someone, instinctively I liked the person. I thought this person could be a great, connector. He could do something extraordinary. And then you take a risk. And that's why I'm classified as a fool, because it's almost like a fool's errand. And a lot of them that hasn't worked. The most that hasn't worked is people that I never had a relationship with. And it's not that the people were bad. It's just that, we didn't have a relationship. I didn't know them well, but I took a risk. And the early stage investing, this is the risk that you take, right? When your uncle gives you that money and your farm friend gives you that money, they really believe that you succeed, but they know that you may not succeed. They know that fundamentally, right? But they want to avert the situation where you say, you didn't help me when I needed money when I was starting, right? So to clear that conscience, your uncle will say, let me just give CK that 5,000. CK knows I just won the lottery. And so if I don't give him the 5,000, one day he becomes successful, he say, uncle, you didn't help me when you... I know you won the lottery last week. So the dynamics around, you see the dynamics around why you get that money, they have nothing to do with the idea. You get it? So there are different constructs around how you think about raising money. So I'm just trying to get your mind to think differently around the construct of how you raise money, which is significantly a different part, which is the artistic part, right? That's how artistry works, right? It's not a science function, it's a different function, So the first group of people, they give you the money that you used to start. So then you take that money, then you sit down, then that idea, you construct it into this bottle. Then you have a product. Now, when you have a product, now you need to go out and sell it. But you can't be the one doing the product and selling at the same time. So you need to hire people. You need to have some office. You have to have business card. So then you go to the next investor, which is venture capitalist. Now, the venture capitalist will say that, I want to see that you use the money that your uncle gave you to do something. So once you're able to show me that, I had this idea to build this bottle. My uncle gave me 5,000. Now look, I have a prototype of it. In tech world, we call it minimum viable product. So something that someone can use and pay you for it. So the venture capitalist, you see the name venture capitalist. Remember the first one, angel investor. You see the name almost connotes how they think and what they do, the function. So when you are at an early stage, don't go and talk to a venture capitalist. You see the point? So do your research. Because if you're at an early stage, you don't have a product and you're talking to a venture capitalist, wrong alignment. So the venture capitalist is trying to capitalize the venture, but you must have a venture. So you see, all of them also, their name is in their name. We are Chanzo Capital. You write a venture capital firm. When somebody's an angel investor, they will write it there, angel investor. So it's in their name. So when you do your research, so the first thing that you need to figure out who is where in what categorization, and then approach them at what stage you are. Then once you've gotten the money to start selling, people are buying the product, the company is growing, you've got 10,000 customers. Then it's okay, we've conquered Kampala. Now we want to grow to Intinda, or we want to go to Munyonyo, or I want to expand it to Nairobi. Then you go to growth capitalist, right? You need growth capital. There are people who provide growth capital. Most of them are venture capitalists. The venture capitalists provide you, some provide you growth capital, right? Then once you're now in Kampala, you're in Nairobi, you are in Johannesburg, you are in Dar es Salaam, you become a big company. You're making revenues of $100 million. Then there's a third group called private equity. I'm sure you've heard of them, PE. They will say, okay, CK, this is a company, you're making $100 million every year, $100 million. Okay, we want to turn this to $100 billion. And then they come, and they normally buy a controlling position because they want to take that formula that you have and turn it into $1 billion company. So they must have control, right? So they are the private equity firms. Then they will then turn it to $1 billion company, and then guess what they do? Then they take it to the capital markets, which is the Uganda Stock Exchange or the Dar es Salaam Stock Exchange or the London Stock Exchange. So you see the stages: angel investors, venture capitalists / growth capital, private equity, then stock market. So when you start a company, you can't go to the stock market, Dar es Salaam Stock Exchange, and say, I want to raise money. Wrong place to start from.
Oh, interesting. Just one final thing for me before
Yeah.
I open it up. The questions are coming in. OPE, Flutterwave, Paystack, Andela recently.
Yesterday.
Yesterday.
Day before yesterday or yesterday.
I mean, what's happening there on both the entrepreneur side and the the entrepreneur side,
Wow.
and also the capital side, right? And how can an entrepreneur, again, out of that market, begin to think in terms of trends with all of what the continent?
Right. So I'll tease out three trends for you. I think the first one we kind of. Then the second trend is the sectors, right? The sector that is emerging as leading is fintech. It's interesting because this started this also happened in 07, 08 in Kenya. And this was a very interesting anecdote. So Safaricom had just started M-Pesa. It wasn't very popular. Those of us in the city, you have to support the family in the village. So I'm sure all of you send money. You put it on the bus, and then people were being attacked on the bus. So, it's like now you can use the M-Pesa to send. But people weren't getting it. Then the election violence hit in Kenya, and banks shut down, transport services shut down, people couldn't move. So the lesson in that is that, when you are building, I spoke to a few entrepreneurs. There's one in the room who said, you're trying to do it, COVID hit us hard, and then we went down. I said, don't give up. Your time will come. The worst is when the wave comes and your product's not ready. So Safaricom's, when it comes to mobile money transmissions globally, if you read the 5 strategies report by Bolton, the third trend is that these things happen in 10-year cycles downstairs, where they show some of the most successful companies, a minimum of 10 years. But unfortunately, when a company becomes successful, they pay the impression that they started yesterday and became successful today. So everybody's like, hey, but me too, I started yesterday. How come I'm not successful today? But that is just the gimmick. That's just the hype, the PR. If you're an entrepreneur, a minimum of 10 years is what you need. So I'm sorry to tell you, if you can't afford 10 years, please, just get a job. It's okay. It will take 10 years for your cycle to come around. But if you can stick around for 10 years, it will come around. Why? Because when you put yourself to one idea and you push it enough, it begins to get a life of its own. So when you're an entrepreneur, you are a co-creator, in a way of speaking, right? And you have to keep co-creating till the wave comes. The best surfers in the world, they don't create a wave. But they get to succeed. But you have to create your skateboard and make sure that you are ready. Because that time will come. David Ross did a recent TED Talk. He said the most successful companies that we see in the gig economy, the Facebook, the Uber, they don't new ideas. You know what they got right? The timing. They saw the wave this time around, and they jumped on it.
I think that's very phenomenal about the wave.
So you have to work the wave. So it's almost like, you begin to understand the dynamics around how you succeed as a company. So sometimes it's almost like a lottery, but it's not a lottery. Because the famous Swedish athlete said, the harder you work, the luckier you become. So there's a lot of luck in this game. But your luck is determined by how hard you work. Yeah. So if you sit down and fold your hand and wait for the wave, the wave will come. The wave will come. But if you see yourself fumbling on a skateboard and then you fall in the water.
The wave.
Right? So you got to work hard and be ready for the wave so that you're ready to be on a skateboard and ride the wave.
So how do you know the wave is here?
Good question. And that's the thing that only the entrepreneur will know. And which is why, and this is probably the most profound thing I'll tell you, this is why you, the entrepreneur, have the leverage, not the investor. Let me show you how you lose the leverage to the investor and why you think that I'm the most important person in the room. I'm not. You are the most important person in the room. Because you are the only one that can spot the wave. You know why? Because you're the one on the skateboard. You are the one who's been preparing the whole night, sleepless night, working on it. You can always know when it's time to go. You will know. It's that nobody will tell you. You will know. When you are ready and opportunity comes, you will know. You will not know if you are not ready. And that's the only basis on which you will not know. But if you are prepared enough and you have done all the homework, you will know. It's instinctive. You know this is my moment and you jump on it. Nobody can teach you that. No teacher, no book will tell you that. No, it's an experience. And this is the differentiator between you and investor. Me, the investor, I am following you. So the investor and the product and generating revenue in Silicon Valley, and this is the second part of why the Silicon Valley's advantage that I told you about is also its disadvantage, right? And this is what I learned there. Because there's so much money, the Silicon Valley investors tell you, don't worry about unit economics. Don't worry about getting customers or getting the business profitable. We will fund you, we will fund the growth. But you know what they're doing? They're taking over your company. Because you're not profitable, I give you a valuation, I take 20%. The next one, I give you another. I give you another 20 million, I take 30%. By the time I give you your third money, I'm the majority shareholder. You're working for me. You say you're an entrepreneur, but you're not. A lot of the big companies that you hear, the big valuations that you hear, they are not majority owned by the entrepreneurs. They are majority owned by the investors. Why? Because the investors somehow, and that's a model that works. I'm not saying there's anything wrong with it. I'm saying that it's a model. But you got to understand that model. That model says that fund growth at all costs and don't worry about unit economics. Because there's a lot of capital that will help you fund that growth. But if you're in Africa where there's no pot of money, you know me, I don't have a pot of money. They didn't give me money to come and call you. You know? Yeah. So for me, when I invest in a company, I want to ensure that the company is able to use that money to get to its next level. And in my view, then you are building a really sustainable company because you are able to fund yourself and grow the business. And that's how businesses that will be around for a long time. So as an entrepreneur, you also have to decide, what kind of company do I want to build? That's a decision you have to make. And once you decide that kind of company, it also defines how you approach the investing exercise. And so if you want to grow, you want an investor to fund growth at all costs, then you must be ready to lose control of your company because your company will not be profitable for a long time, right? But the investors that will fund you, but they will control the company eventually. Or you can say, I want to build a sustainable company, so from day one, I want to focus on unit economics. I want to get to profitability. I want to take small money, sweat it out, and get a customer to be paying for the growth. So it's a decision also that you have to make. And that's the
take away with me for a long time. I keep telling people that after God, I fear entrepreneurship.
The entrepreneurs are called creators.
Yeah.
Created with God.
Yeah. And then someone corrected me and said, no, after God, fear women, then entrepreneurship.
That's another whole subject.
Yeah, but I want to open this up to you, and I have some questions online. So if you're here and you have a question, please put up your hand. Tell us what you do, and connect with Eric, and let's take it.
WAPI.
WAPI is a digital talent marketplace, and we are trying to take advantage of the gig economy by fighting the unemployment problem we're facing. And we feel that now is the great. Before you then think of raising capital, and for me this has been like a big question, how do you know that you actually need capital, right? Because you might be bootstrapping and you still have some money coming in and things are not yet right, but then how do you know that this is when I need the capital, or this is when I can raise? And second would be, how do you avoid getting into bed with a wrong investor?
Two good questions, Collins. Thanks a lot. So the first one is almost like you can look at it from the stages that I described, right, of a business. And so when you're at an early stage, the question you ask yourself is, how much capital do I need to take that idea in my head, right, and create a product? So you may say, for example, I need to hire a CTO, somebody who can write the code. I need to pay him, I need internet, constant. Maybe I'm working from home, so I have to pay my house rent, So you calculate those things. And then you say, okay, it will take me 6 months to 1 year to be able to get a minimum viable product. Then you amortize. So then you know that it will come to 120 million Ugandan shillings or something like that, right? Then that gives you the numbers. So that's practical. Then you say, okay, now how do I get the money? You hustle your uncle, you hustle your friends from school, or you say, actually I have 120 million in my savings that I've been saving. I was working before, or when I was in school, my dad was giving me money, or you were doing some side hustle. So you have one. So it's okay, and I'm going to bootstrap. So I have my own money, so I'll do that myself, right? Or you say, oh, actually I only have 70 million in my savings, so I'm 50 million short. Okay, then you go and hustle your friends or your uncle who won the lottery. Uncle, you told me you won the lottery the last time. So, it's time to start the company. I've been in this employment for too long. You make a case. Then, when you go to the next stage. But your second question about, sorry, I missed the second. Can you just prompt me on the second one? Get into the wrong. I tell entrepreneurs, the same way if you don't raise money, your company could fail. You can also raise money from the wrong investors and your company will fail, right? So the same way we investors, due diligence, ask a lot of questions. You should also ask, first of all, you should do research on an investor. For example, one of the simplest ways to do research on an investor is talk to the entrepreneurs invested in. Very simple way. It's an entrepreneur like you, so he will talk to you. If you go to my portfolio, it's on our website. You go there, you look at their names, you go to their website. There's a number there, or there's a CEO's name. You go to LinkedIn, Facebook, you send him an invite, he will accept. You're also an entrepreneur, so you will say, then you say, hey, this Eric guy, how's your thing going with him? He will tell you everything. And if we are now having a good relationship, he will tell you about how my relation with you will be. So the first thing you have to do is that there's simple ways in which you can diligence an investor, right? And so you need to, once you've made those fundamentals that I talked about, you have a sense of what kind of investor you need, right? I've told you a bit about what we look for, right? So you can now begin to say, okay, is Eric the right investor for me? And if Eric is not the right investor for you, you don't want to start with Eric. Maybe your thinking is, no, I want an investor who will just give me 100 million every day. I won't get customer. I don't want to talk about unit economics. I don't want unit. It's fine. It's your path, but you want to be on that path. So you find investors who don't talk about unit economics. They find is growth. And they're investors like that, right? Or you say, I want to do unit economics. I just want to be able to give up a little bit of my company, raise enough money, and then control the company and build revenue. And Eric is the kind of guy I want to talk to, right? Because part of it is also that the way we see investing, that we see it on the lens of, when you start, you create a certain pie, right? Our thinking as investors, and this is now the value system that we, Chanzo Capital, subscribe to. We subscribe to the school of thought that we want to come into the boat and make the boat bigger, as opposed to trying to own a bigger portion of the small pie that you have. So it's two different ways of looking at things. The people invest and they say they want to get a bigger portion of what is there already. We want to own a small portion but make it bigger, right? So you also understand the philosophy of how investors look at value creation. And that also, if you don't have those elements in place, and this is where alignment is important. So if you don't have that alignment, so the guy gives you the money, and he is trying to tell you, no, go this way. And you go, no, I want to go this way. You eventually have a problem. Because even though you have collected money and is invested in the company, your board meetings will always be, he's going this way and you are going that way. So it's important also that you are so aligned with the investor, not only in the vision of what you're trying to build, but in how you execute. And there's a third element of that, which is the most tenuous of that, which is that, as an entrepreneur, whatever you told the investor or whatever business plan you wrote, it eventually doesn't turn out exactly the same way. CK will tell you, when he started building the innovation village, you had a vision, but it's not, you didn't think about it this way. I bet there's no basis on which you can say that this was I knew that there would be a room like this. No,
And would speak to Eric on this day.
you never knew. But you had a vision that I want to build something, right? And you sold that vision to your friends, people started working and believe in you. So how does it work? So you as an investor have to way. If you don't respond to the market, you are dead. So the market eventually determines who will succeed or who will fail. And the companies that have succeeded are the people that listen to the market and act on what the market is saying. So the market always speaks. The market has a position. You can take the market's position or follow your position. If you don't listen to the market, it will punish you. The market will always punish you. So the entrepreneurs that succeed are those who listen to the market and they follow the rules of the market. That's the customer. The customer will be telling you, I want it this way. You say, no, customer, no, me, I will do it this way. Okay, you do it this way. Okay, do it. They won't buy your product. They won't use it. They won't recommend it. They'll die. But if you listen to the customer, the product will keep succeeding. They'll keep buying. They'll recommend it to other people, and you grow.
All right. Yes.
Hello everyone, my name is Paul Katumba and I'm a CEO of a company called Minute 5. And at Minute 5 we do deliver fresh groceries to consumers and to businesses. So my question is, I'm glad I've learned about creating relationships with investors, and I think it's part of, it has answered my question partly, but also I would love to know more extensively. What would an entrepreneur do if they were too big for angel investors, but then too small for VCs? What would an entrepreneur do if they're trying to raise capital in that sense?
Oh, that's a great question. It's a dilemma. I'll answer your question with a company we just invested in. The entrepreneur decided that they were going to go to the market and the money to convince their first customer with an idea. They hadn't built any tech. And then work with that customer to validate the idea and broke even in 6 months. And now, they have a business that's broken even, but there's no technology. And there's supposed to be a tech company. And now they're building the tech to catch up. Right? And that is the right way to go. But the challenge there is that now they have to build the tech quickly enough. So we are funding them now to build the tech. Right? And I think that, and the reason we invested in this company was that they have actually spun this the other way, which is, in my view, a very strong case in how you are able to go to a customer, take a problem they have, figure out a way to solve that problem, and create the customer flows and the processes. So when you build the product now, the product is exact. Because there is no if, there's no, you know exactly what the customer wants because you've delivered the product. You know that when they order this, it goes there, and it goes there, and then it goes there, then it goes there. So you can build the product exactly. So to answer your question, I gave this some because it sort of creates a challenge, but it's a good problem to have. And the reason why it's a good problem is that you already have a customer who's paying, you are broken even. So you could actually fund the development without Eric. But I will be more interested in investing in you. Why? Because you're already broken even. So this company, it was a short conversation to get going. And the reason it's a short conversation is that you've actually solved the most difficult part of the equation, which is getting to break even and getting your product to a level that the customers that are paying enough for it, so that you don't necessarily need the capital for me to solve that problem, but to start build the tech around it. So it makes it easy in some way. Now, the other side of your question is that, let's assume, so you've raised the first money, but you've built the product, you haven't gotten the traction, and now you want to be able to get to that traction stage, but you don't have investors who will give you the capital for that, right? Then, again, the way you solve that equation is then focus on your customers. Because your customers, if you've built the product right, they will recommend it to another customer. You recommend it to another customer. You know, customer recommendation is the easiest way to acquire customers. It costs you nothing. So focus on satisfying the customers you have and delighting those customers such that they will then be your marketing team. You can actually use your first customers to build your marketing team. You don't need to go and hire marketing people because the product works so well, they like it. You know, if you like something, what do you do? When you like something so much, when something works for you so much, what do you normally do? Finito. You tell all your friends, you know, I've started using this app. It works like magic. Boom, your friend uses it. You know, your family, when you are sitting in a family meeting, they want to order, say, I use the pulse thing. Pulse thing, it delivers it like, it says 1 hour, 15 minutes, the thing is here. So we want to order more drinks. Let's call Paul.
Our time is fast spent, but I want to give an opportunity to just 1, 2.
I think we need some gender balance.
Yeah, I was going to say we need a
Gender
lady
imbalance.
to.
Not just a lady, but let's get some more.
Yeah,
Let's do better.
yeah.
Sorry, right?
No, it's all
My
right.
hand kind of moved.
Right.
Thank you so much. My name is Patience Sankunda. I'm a computer scientist and CEO of African Fit, which is African Fit. It's a business that's focusing on providing quality fitness products to the African market. We're building products with an African in mind. In other words, affordability but quality. We're not compromising on quality. My question is, how many of the, I don't want to say startups, but the businesses you're funding have women leading those teams? And how would you rate their performance compared to the ones that are led by the gentlemen?
Good, very good question. So in our first portfolio, our gender ratio was very bad. We're probably at about 15% female founders or co-founders. In our second fund, we want to improve that. So it's something that we haven't done well at. The VC industry globally is terrible at that. And I think that generally as a race, we need to improve what we call gender forward, right? It's interesting because in Africa, a lot of the entrepreneurs are actually women. Majority of entrepreneurs in Africa are women, but very few of them are funded. Right. And part of it is that, also part of the equation is that there's not a lot of women funders, right? Women investors, right? So if you're a male investor, you're predominantly sort of like, your automatic lineage is invest in males, and we've done a lot of that, and we want to change that. Even in our team, my partnership, there's no female partner, right? So we need to change that. We need to improve that internally. We've started with our board. We cannot have a gender parity in our board. We want 50-50 gender parity in our board. We want to do that in a partnership. So the next set of partners we want to bring on female partners, and we're working on that. And once we have that, it will permeate because the female partners will be invested in female founders. They'll be looking for female founders, right? So there's a lot of work that we need to do as a firm. The VC community generally has to do better in that. And I think that there's also a lot of work to be done in the ecosystem that breeds entrepreneurs. I'm sure, CK Jaffet is aware of that. He's working on it. I met, sorry, remind me your name again. What's your name? Lady at the back, your lady.
Rachel.
Rachel. So I met Rachel in 2019. She reminded me when we went to Tanzania, she was working for Smart Code when we took our event there. And I was excited to see her now working with you here and helping build a brand. I mean, the Innovation Village has a huge brand. I mean, your brand is incredible. It's good to see that she is leading a team that is doing that, right? So I think that generally, I'm giving these examples as, this is a thing that we have to work on. We are not there yet, but technically, when you look at the data, now to sort of the second part of your question, there's empirical evidence that support the fact that companies that have female founders do better than those that don't. Right? I think there's enough data, at least in the global north. We need to build a data set for the global south, but I don't think it's going to be significantly different, And so it begs the question then that if you want to have better performing companies, then you need to fuse gender. So one of the things that we want to do is, it's not just backing female founders, but we also want to infuse gender into the leadership of the company that we invest in. So even if there's no female founder, how can we bring more female leadership into the company? And you can do that as an investor. So the next guys you're hiring. So I'll give you an example. We invested in a company in Kenya called Finaccess. The founder was a male founder, sole male founder, Barkley Okari. And when we invested, it was just him, and the whole team was predominantly male. So I started working with him. 4 years later, today, Barkley is the only male in the senior management. The CTO is female. The deputy CEO and head of partnership is female. The CFO is female, and the head of growth is female. And that company has exceeded all its numbers since we had predominantly female leadership. So we have a container experiment within one of our portfolio companies, and we've seen very clearly how much infusing female leadership to the company makes a huge difference on the performance. So, in other words, this is not just about gender. It's not just like patronizing women, right? I really think that it's about outcomes. If you do it intentionally and do it well, your company will do better. And that's what we wanted to do in this experiment. And we're excited that it's gone well. Even under COVID, this company succeeded. It was still growing under COVID. And I bet that is because of the leadership that we put in place. So we hope to do that in other portfolio companies. As I said, it's part of what we are trying to do as a firm. And we encourage other entrepreneurs and other investors to look at that model.
All right. Yes.
Hi. Let me start by thanking the Innovation Village and Japheth for putting all this together. Welcome, Eric, to Uganda. My name is Bobby Muhumuza. I run a tech consultancy and advisory firm that provides low-cost developer services to early-stage startups and local small businesses who ordinarily wouldn't be able to afford them at such an early stage. And I'm also an ambassador for the Global Startup Awards for the African East African region. Yeah, so my question to you is actually three-pronged, and I really wish we had more time, but I'm sure you can wrap it up somehow. I see you have a very impressive and formidable portfolio of ventures.
You run Andela for startups, huh?
Andela for startups.
There you go. There you go.
I need you to help me brand. I think you're doing Yes, that sums it up, basically, yeah. So, and I hope I can exit very nicely like they did this week.
Yeah. We'll give you 5 years to do that.
Exactly. Yeah, so my question to you is that, I see you have a very impressive portfolio, very formidable portfolio of ventures. And I don't know, I'm sure, perhaps you don't like to pick favorites, but which is your favorite, why, and what hindsight do you glean in terms from a perspective of raising capital and how their founders built their company? Those two tracks you talked about, the art of raising capital, the science of building, that particular venture that's your favorite and why?
Right. That's a very tough question. When you have a portfolio, you almost sort of like every company is your favorite for different reasons, right? So it's difficult to say this one is the favorite among all of them. It's almost like when you have kids, right? You love all your kids. You love different kids for different reasons, right? So there's no real one that is a favorite for me, but I love all our portfolio companies for different reasons. And probably I'll put out two. So Finaccess Barkley is an entrepreneur that found me. He's one of the first entrepreneurs that actually wanted a certain type of investor and then came to an event now about a question that could be in your mind. So how do you find investors? So this is what Barkley did. He did research on me and wanted to raise money and said, this is the type of investor I need. And then figured out that I was speaking at an event and managed to get into, it was an investors event, managed to get himself into the event, sat next to me, said nothing the whole time. And then when the event ended, I was about to leave, say, hey, but I have to talk to you. Like, oh, I didn't know you were here. It was an investors dinner. And he sat right next to me. Then I noticed that this gentleman never spoke the whole time. So I kind of felt bad because he had come to the dinner. He never said anything the whole time. He ate, he listened, And then when we were about to leave, he said, but I have to talk to you. I was like, uh-oh. I said, okay, I'm running to another meeting, but can you come to my hotel tomorrow morning? Let's have breakfast. He said, okay, I'll be there. Check this out. So then I left. The following morning, before I got to my breakfast at my hotel, he was already there seated. For me, that was extremely impressive. He knew what he wanted. He knew how to find me. And when it was not convenient for me to talk to him at that point, he gave me the latitude and took the option that I gave him to come the following morning. I was going to the airport. It was 7 a.m. I found out that he got to the hotel at 6:45 a.m. Found out where the restaurant was, the breakfast is served, took a table and sat down, and they didn't call me and waited. And I was out at the dinner table at exactly 7 o'clock. He was seated there. So I went to sit at his table. We spoke for 15 minutes, and I knew that it was somebody I was going to invest in. Now, I don't prefer him over the other entrepreneurs, but I'm just trying to give you a perspective about how he found me, right? Then, another portfolio company. I liked the founders because I'd known them from high school. They had actually come into a program that I created for entrepreneurs when they were in college, in their final year in Ghana. And they came to that event, and according to them, it was through that event that they realized they were entrepreneurs. And so after college, instead of going to the UK to hustle, which they had an opportunity to do, they decided to stay and start a company and then reach out to me to be an advisor to them. And that's a very powerful story in the sense that, for me, it validates the thesis that they were conscious of what they were trying to achieve. And today they've built a very successful company. Indirectly, they kept on a track, which is sort of the investing track, because they kept the relationship going. It was long after. But we kept in touch, right? So they built a relationship, right? In the case of Barkley, you can see that it's a bit of a different path. But within a short period of time, he gave me an impression of himself that sort of endeared me to him. Normally, a startup would have come to that meeting and asked me most of the questions, which is nothing wrong with it. I'm just saying that it's a different style, right? But his style was, let me listen in. The investors talking, and he listened the whole time. And according to him, later on, he told me he learned a lot about investing from sitting in that event. So he figured that if I can get to an investors event, I can learn a lot. So he came and sat and learned. And then he had an opportunity to talk to me, but unfortunately, I said, look, I have to go to a meeting. Some entrepreneur would have said, no, I have to talk to you now again because of you. I'm not saying there's anything wrong with that, but he sort of figured he's got some other appointment, so I'll let him go. But then he took the opportunity that I gave him, right? So sometimes you can see this is also a construct that I just gave. This construct I gave you, they are not science. They're almost like an art. It's almost like not planned, but somebody worked out. So I hope you're getting the message. So I didn't answer your question directly, and I can't have a favorite company, but I can give you a few more scenarios around all my portfolio companies. There's a story. Let's make sure we don't get in his black books.
Yeah.
So let's give it a chance.
Yeah. Thanks for the talk, and my question comes from the stages you gave us.
Yeah.
And I need to introduce myself. My name is Yazid Mugare. I'm the founder of Eric. My organization is an education company that aims to bring a holistic education to most schools in Uganda.
Right.
Back to the stages. The first stage, which is friends, family, and food, is a bit problematic in our environment because, as you can see from the Kings, Kenya is the strongest economy in East Africa, and it's the same with all the other countries, which means poorer countries like us, where friends and family are not as well, we are lagging behind, and I think this explains why.
So now I'm going to take the lead off a little bit. So one of the things I'm working with CK on is, and what CK is and the team has been able to achieve. Actually, let me just take a pause to really congratulate CK, because what he's built is incredible. To start this from nothing, have a vision. This is 5 years ago. We started talking, he had a vision, right? And I said, it's going to be hard, but you got to believe in yourself and wake up every day and build. The next stage of what you're seeing here is he started something also called the Kampala Angel Investor Network, CAIN, right? And the plan is to try and solve this problem of building an angel network locally that will start supporting entrepreneurs. We're working on it. We want to also do a fund. We're chatting about it because now you build a strong enough ecosystem with great founders like yourself. So now we have to now bring the investors in. As I said, remember the story from in Silicon Valley, there was a pot of money for people to call people and say, you need money. We don't have a pot of money. You acknowledge. So the way we are going to do it is going to be different. So as I said, you are between a rock and a hard place, but you are the pioneers. I'm looking forward to 10 years from now, your company being very successful so that you can invest in the next guy. Unfortunately, nobody started an educational company like you in Uganda, remember? And so nobody succeeded before you so that they can fund you. So you are the pioneers. So the second point, the second stop I want to make here is to recognize you guys in the room and all of you in the Innovation Village and in Uganda. You're all pioneers. You're going up against a rock and a hard place. And you're figuring out something that is hard. You've not built a company before, but every day you're waking up and working through the muscle. You're building tech talent for startups. It's hard. You can't find the talent. When you find people, you have to train them. Then you have to sell them to startups who don't have the money to pay you. You are pioneering. You're building a new class of entrepreneurs. You're building a new class of businesses that will change this country, that will transform Uganda and take it to the digital economy, right? So I want to congratulate you all. The nightmares you go through, the challenges that you're facing, you are pioneers. Some people build that to make Silicon Valley. Some people build that to make the United States what it is. You are building Uganda to be the next frontier country. So it's hard. It's not easy. You're going between a rock and a hard place. But if you keep at it, you will succeed. 10 years from now, you'll be the angel investors funding the next thing. So if you're not finding angel investors today, don't give up. Keep trying.
Yeah.
Keep talking to Jeff CK. Keep talking to me. Keep finding a way. Where there's a will, there's always a way. And we will do our best to start providing the framework for more capital to come to the ecosystem. But the reality is that we were not given a sack of money to that context is a very important context. But we will get there together.
Yeah. Yeah, so Eric, when you said you wake up every morning and my mind told me if you're lucky to sleep.
Well, yeah.
Yeah, but
that's 1 hour sleep, right? When you get 1 hour of sleep.
Yeah, so yeah, unfortunately our time is spent. And like I said, if you've joined us online, sorry I couldn't get into all the questions. Really interesting, questions. So where does someone find you if they're looking for you?
Yeah, I'm an open book actually. If you go online and put my full name, you find LinkedIn. Please reach out. Even if I'll most likely not invest in a lot of companies, but I can connect you to someone. I can give you an advice. I can give you rant to. I have my founder. They call me and then I'm just listening, and then you rant and I say, okay, finish. Okay, good night. Then I go back to bed. Sometimes that's all you need. You need somebody who just listens to you. Sometimes that's just the thing that gets you to the following morning.
Yeah.
And we at Chanzo Capital, we want to be able to be there for you.
There, make sure you're speaking to someone you don't know in the room. Connect with them. They could be the conversation you're looking for, the relationship you're looking for, and thank you very much for making the Innovation Village part of your journey. It's not easy, and I tell people that I'm quite aware of the fact that we haven't given the entrepreneurs everything they need. It's a journey to build the ecosystem. The last piece we're solving for is the capital piece, and that's why we're having these conversations. I'm really keen to get to that point, but not yet, but we're getting there. So thank you very much for joining us this evening. If you're online, thank you for joining the conversation. Sorry if you're online, you won't miss out. You'll miss out on the teas here. But we look forward to the next conversation and what comes after this. Thank you.